discussions at these meetings that many FOMC members are just uncertain of sort of stalling. And if Friday's jobs report, which is and therefore will survive more than just one administration.
Do you see it happening in this administration, perhaps even in 2025?
Well, the timelines are hard to tell. So, but do I think it's research that shows that Gen Z, which is this youngest generation, actually is adhering most closely to tradition.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.
Surveys, University of Michigan and Conference Board, the respondents have listed tariffs and the uncertainty around that and Doge as a bigger concern than inflation. In the regional Fed surveys, many businesses have talked about how they're uncertain if tariffs happen, if they can pass on those price increases, and it is causing them a lot of uncertainty. And then if you look at earnings transcripts for both S&P 500 or the broader Russell 3000, comments about tariffs are at 7-year highs. So there is clearly a lot of uncertainty, and uncertainty, of course, causes people to slow down their activity.
Trump has styled himself literally tariff man. He's sort of elevated President William McKinley, who was a big tariff guy in his day. What do you think the chances are for him to back off his tariffs if he sees more reactions like
the economy? We know that in general, private sector spending gets crowded out by government spending. In other words, in an economy, government spending essentially competes with private sector. So if you're shrinking the government sector, it is reallocating money to presumably a better return on invested capital. So it should actually be better for GDP. But as you're pointing out, in regions that are affected by Doge cuts, there will be unemployment. It's not that different from globalization in the 80s and 90s, which actually left many states in the U.S. without manufacturing jobs. And I think that Doge is discussions at these meetings that many FOMC members are just uncertain of the consequences of tariffs and the new policies. On the surface, they realize it creates short-term inflation pressures, but the long-term consequences are unknown and possibly would slow the economy. So I think that the Fed's decision is really to be on hold until they have visibility. The market views the Fed on hold as a hawkish pause at the moment, meaning the Fed realizes the employment market isn't creating inflationary pressures, but the current inflation environment is sort of stalling. And if Friday's jobs report, which is for February, is under 100,000 jobs, I think the Fed will see that there has been a sudden change in the momentum of the labor markets, and I think that they would have to react to that. Because again, if the economy gets to stall speed and a recession starts, the Fed has to take emergency measures, which means drastic cuts rather than a cutting cycle.
In terms of the Fed, early, I think it was in January perhaps, that after particularly, maybe it was a strong employment report, that weren't pricing a cut until late in the fourth quarter, but recently they...
2009. If the business cycle matures or experiences a shock in a way that triggers a recession, and it's one that begins to look really severe, then markets can't go up anymore. In other words, we could have a growth scare this year. And I think that's what's really, this is all shaping up to be. And because we could have 1 or 2 weak job reports, Fed starts to ease faster and it prevents the economy from stalling. But if we have a full-blown recession, that's going to be hard to be recommending stocks. But actually that was the correct time to turn bullish again, because every purchase of a stock from June to October 2022 became profitable within 3 months. So that's not even 3 years ago.
Continuing on that theme, it looks like the next few weeks are going to be pretty important to see, well, certainly the first half and maybe the rest of 2025 go. Any sort of forks in the road, like a decision, something that we'll see very quickly? Is it tariffs that are supposed to go through tomorrow or very soon?
That are going to be very closely followed.
I want to switch gears just a little bit, and it's something that happened very recently where you turn around and it's why is Bitcoin up so much on Saturday? And you quickly find out that the president has put something on Truth Social. And he talks about a digital reserve and what he wants to put in it. What do you think about the United States having or any other country having a digital reserve? I
would probably answer it by saying that we're constructive on digital assets. We think blockchains and therefore will survive more than just one administration.
Do you see it happening in this administration, perhaps even in 2025?
Well, the timelines are hard to tell. So, but do I think it makes a lot of sense for the U.S. to do? Yes, I think it does make a lot of sense.
As far as you're aware, are any other countries have a digital reserve or are seriously planning one?
Well, none of the major G7s have done something like this. El Salvador comes to mind, and it's been a success story for them because El Salvador actually has one of the lowest funding costs for any country. I think investors do have to view that as a credible rise, and if Europe is outperforming year to date, I would, barring any geopolitical shift, it probably does signal that Europe could outperform the U.S. this year. Is it making sense that that's happening? I mean, in some ways, I'd say yes, because Europe is more of an industrial and financial economy. So the banks and industrials are larger weights in those indices, a lot less healthcare and a lot less technology. If the global economy is bottoming, so some exists, I'd say Chinese stocks have outperformed expectations. So I think people should just be aware that China might be finally a case where all the bad news is baked in.
Do you think that it's time for Americans who've done really well with the Mag 7 and an S&P 500 over the past, since 2022, since the end of 2022, is it time to start allocating a significant amount of capital to indices in Asia, in Europe, if there's concern about the goal of lowering interest rates here? Is there more value elsewhere? Should people
Europe or Asia? I mean, they do through ETFs, but that's really not as pronounced an allocation for them.
So perhaps folks, a lot of allocation in the S&P 500 or which is Mag 7 has an over sort of weight driving it. Mid cap and small caps might be a better an alternative destination for.
Yes, that's right. But I think for those who do global allocations, I think the case for owning Mag 7 still exists, but to be overweight Mag 7 probably diminishes this year. So I do think that there is going to be money flowing to Europe and Asia, but it was research that shows that Gen Z, which is this youngest generation, actually is adhering most closely to traditional family values, like adoption of formalized religion is rising. It's higher than it was in Gen X and millennials. And so it would argue exactly the opposite, that most likely we have a generation coming up that's going to get married and have kids even earlier. So we might have already reached peak late, people with late births, that could be reversing. So I don't know. But what I would point out is we know that wealth,
things keep sort of going for a while, even if you stop producing in a way, you have a fair amount of cushion, so to speak.
5% interest rate, that's $7 trillion a year of income. I mean, that's just without even having to wake up except drink your coffee. So. And
$5 trillion that has to go either in, either in the stock market or in the, in your S&P ETF or at least in some sort of interest-bearing.
Yeah, I think the U.S. economy is still very well positioned, is really what I'm just saying, that it's hard